All right, here's another CNBC Tesla related video. Let's check it out together.
George, good to have you here. You heard Phil, but you kind of break down the delivery numbers. We got whatever you want to call it, a 10 or 15 or 20,000 unit beat relative to forecast. And we got 50 billion in market cap added this morning, and the stock is almost at your target of 293. So how should we be thinking about the what's already implied in Tesla's market value, and where do you think it can go?
Look, Tesla for us is an incredibly powerful long-term story. As we've talked about over the last 6 months, they did something that was pretty smart, in our opinion. They cut prices to stoke unit demand in the hopes of, over time, increasing the penetration of their FSD software. Right now, that FSD software costs $15,000, and we estimate that globally it has about high single-digit penetration rate. Over time, we expect that to get a lot higher, and we're in print saying that we think that the company should probably lower that price from 15,000 to probably something like 10. And so when you think about what that does to the margin profile of the firm over a long-term period, it's huge, right? Right now,
massive
as Phil
margins.
alluded to, the company broke its promise, and its margins, its auto gross margins were below 20%. They were 18. Now those margin expectations are subdued for the rest of the year. We think there are some tailwinds even in the near term because those price cuts kind of stopped over the last couple of months. But over a long-term period, if they could increase that penetration rate of FSD software, which is real-world AI, the margins of the firm should go a lot higher over the next 3 to 5 to 10 years.
Yeah, a lot of people are missing the AI factor. I know AI is like a huge buzzword now, which is like so annoying. With like before there was metaverse and NFT and crypto, and now it's AI. You put AI in everything now. Like a new watch has AI in it. Like it's everywhere. But Tesla's been working on this for years, like over a decade. So they've been in the AI game for a while. It's just like more of the language-based models have come out. And like I use my full self-driving beta almost every day, and it is getting better. It does have its problems still. It's not perfect. You have to be paying attention. You have to it's not gonna just you go to sleep and it drives you. You have to pay attention. But it is getting better, and they are close. So a lot of people are missing that. He seems to get it. He seems to get the AI play. So yeah, we'll see.
But the fact that when it comes to Tesla, the AI component of the story is full self-driving. It is autonomous vehicles. It is something that we've known about and has been in the market for a really long time. Why should we all of a sudden be applying that much more value to it in the last 8 months when everybody's been consumed with excitement about large language models?
It's a great question. We've known about it, and we seem to be getting a lot closer to this actually hitting the penetration rate that will stoke demand even further. But importantly, I think the stock got to $100, not because people were concerned about AI, but they were concerned about vehicle demand, right? So right now what we've seen is expectations came down quite a bit in the winter of last year. Since that time, Tesla cut prices. It's worked. They've gained unit share. They've got their footing back. And what we've seen is the pendulum swing way too far into the negative camp. And right now, not only has demand stabilized, right? Margins could get better over the next 1-2 quarters. And like we just talked about over the long term, we have the Cybertruck being released at the end of this year in small volumes. And if you look out a few years, there's a lot of earnings power here. A lot of the stocks that we talk about in our group don't really have earnings power. We cover sustainability. These are very young companies, but Tesla, who we term the sustainability behemoth, has real earnings. And if you compare it to that group of stocks that we call the Man Group, the 6 large cap tech companies, it's incredibly attractive for the growth. And it always has been. I mean, when we initiated on the stock last year here at Canaccord, the discount was even more. And today it's narrowed a little bit, but the stock has underperformed the Man Group on a 1 to 2 year basis, and we think that has a lot more room to run.
So yeah, the Cybertruck's coming out end of year, and I think they have started on the Mexico factory building the new cheaper model, which is half price to build the factory, half price to build the cars. So we'll see how that goes. The Mexico plant. So those cars are going to be coming out pretty soon. I have my Cybertruck on reserve as well. So okay, let's keep going here.
mentioned, George, the margin several times, and obviously they did
Oh yes.
sort of underperform even their own target.
Oh yes, I wanted to talk about the margins. So Tesla has the ability to drop lower and raise prices because everything is connected. It's just online. You buy your car online. They can adjust the price as they see demand. If demand is too big, they can raise the price. If it's dropping a bit, they can lower the price really easily, and it's right there on the website. What they don't cover and they don't talk about is dealerships raise and lower their prices all the time. Like they're constantly going up and down at different dealerships, but we just don't see it. It's not public on a website. It's their vehicles in a lot, and they could raise and lower the price. You can negotiate a cheaper price. Guys, like that's something they never ever touch on. But Tesla is obviously it gets a lot of clicks, and they want to like focus in on that. But Tesla has it's an ability that no other dealership has, right? Like no other big car companies have. Like the Fords and GMs can't lower and raise the price. The dealerships have that power, and the dealerships raise and lower the price as they see fit. And it's not, on the website, a main website for you to go see and cover. Like every dealership is different. So yeah, Tesla has that unique ability to raise and lower, to deal with demand, a higher demand. They can raise the price if it gets too crazy and they can't produce enough cars. They can raise the price like they did back in 2020 when they raised the price. And they can lower it as the production speeds up because they have 2 new factories that are ramping. Production is speeding up. They can get more cars out, as you can see, quarter by quarter. The deliveries are going production is going way up. So as that starts to get more production, they can lower the price and stoke demand even more. So, and their margins, it's like, it goes from 20% to 18%, but look at every other automaker. They're like just barely getting by. It's like 2% to maybe 5%. And on their like general cars, but on all their EVs, they're all losing money except BYD. Maybe it's like 2%, 3% margin, but for GM, they're all losing money. GM has never made money on the Bolt, which they just canceled. So it's like, going from 20% margin to 18, and they could kind of fluctuate. They can raise and lower that as they see fit. It's a huge advantage for Tesla.
At what point, though, does that become a concern if they don't begin to improve it? I know when you're looking at growth, sometimes margins can be overlooked, but at some point, you have to want to see that build.
I think you have a really good point. And so far, so good on Tesla's strategy of cutting prices and improving unit volume. But the razor blade model that we've talked about, selling units and eventually selling the software, we don't know yet. I mean, if it doesn't take off, this AI software, if the FSD software over the next, call it 2-3 years, and they don't get that margin boost, then it wouldn't have been as successful. We think it will. We think it adds a lot of value to consumers and to the world in terms of sustainability, but the jury's still out. We have to see if it happens. We're making the bet that the company has an incredibly powerful software suite, and that penetration rates will go a lot higher over time.
George, great to check in with you. Thanks a lot.
Thank you.
All right. Yeah. George seems to like, he knows what he's talking about, George. He did a good job there. But yeah, again, they don't talk about the ability to lower and raise prices, and like the 20 to 18% margin is a great margin for a car company. Like, I know they're more than a car company, but like for any other automaker, they're like way less, 5%, 3%. And Tesla is just like way better. So I don't know why everyone's so concerned with the like, oh, they went down to 18, like it's gonna go down. Like that's still a huge difference. It's like 3, 4, 5 times better than the other automakers. So it's just baffling to me. But all right, that's it for today. Check out the next one coming out tomorrow. So subscribe to the channel so you don't miss any of these reactions to these Tesla related news stories. Leave your comments in the comment section and let me know what you want to see. What's your thoughts about Tesla? Are you new to this stock? Have you been following it for a long time like I have? I've been following it since 2018. Been buying stocks since 2018 and I haven't stopped. It's my only stock in my portfolio. So yeah, let me know what you think in the comment section. Subscribe to the channel and I'll see you next time. I'm out of here. Peace.